just listed on the TSX-V on the 30th of July. So we are 2 months old as a listed company, but we have been working in the royalty space for the last 3 years. And so I think a lot of what we are doing now is introducing our story for the first time to new investors and making sure people know we're there. And I'll take you through a shortened version of our presentation today with a disclaimer here. And there is a longer version on the website if anyone would like to go there. So the first 2 slides are for those of you who aren't so familiar with the royalty model. And for those of you who are, a quick reminder. But the key benefits of the royalty model are that you have a very simple strategy in effect. You are buying royalties over existing assets, whether they're operating or exploration or development. And then really you are waiting until they come into production and receiving a percentage of the revenue on an ongoing basis. And that allows royalty companies to be very focused, to have low overheads. So the largest royalty companies out there can be $20 billion with 30 people on the team. You can be more diversified geographically by jurisdiction, by operator, by counterparty than most mid-tier and major mining companies very quickly. And it is a really scalable model where you are adding in new royalties as you go. And for each royalty you acquire, you then have increased optionality over all of that ground. And that really is the power in the model. You might have an 8-year mine life to start with, but in 8 years' time, you might still have an 8-year mine life. And for the royalty company, that is where you see the real benefit. And that's shown through in the outperformance over time of the big established royalty companies. And here you have the GDX and gold. And I think that for those investors who know the royalty space, it has been a very good way to get exposure to precious metals. And it's actually more diversified, less risk. And despite that, has really outperformed on the return side. So I think that is partly why it is such an attractive model. So if the model is great, why then Elemental? And Keith gave a quick introduction, but we came into the markets at the end of July, but we've actually been around as a private company. We started this for the last 3 years. And full transparency, we have put on the first slide every quarter revenue since we started the company. And you can see that we have doubled our revenue on an annual basis from a standing start. And today we have royalties over 5 operating mines. So 6 royalties in total and 5 are over operating mines. And I think that's a key differential. And we have one of the royalties that will start paying us from 2022. So we have growth in our portfolio from that already. For 2020, we're looking at about $5 million, a bit over US dollars in gross revenue, and we're on track to meet that with the majority from gold. Really importantly, management team that have a material ownership stake in the company. So just about a quarter of the company. And then the royalties, uncapped revenue, and no buybacks on them. So what we have today, if those mines keep operating, we keep getting revenue from them, and that won't change. Here, second slide on Elemental is diversification, really important. We are for today a sort of $70 million Canadian market cap. We have 90% exposure to precious metals, and we have a portfolio that is 98% weighted to royalties over operating assets. And for a company our size, that is unique in the marketplace today. Most junior royalty companies you will see might have 1 producing royalty and 10 or 20 exploration assets. We've done it the other way around. We have got revenue from day one. We have been cash flow positive from day one. And we have built a really solid foundation when we came to market so we can hit the ground running and make the most of it. And if you look at some of the operators and jurisdictions, Teranga, Premier Gold, listed in Canada, you might be familiar with, and Australia, Chile, Mexico, Burkina Faso, jurisdictions where there are established mining industries. And again, it de-risks us as we go forwards. This slide here is, I think, one of the most important takeaways if you're thinking about Elemental. And that is you're coming into a new royalty company that has doubled its revenue every year since it started, and it is 98% weighted towards royalties over operating assets. And that is more than even Franco-Nevada. And I think if you look at most of our peers at the junior end of the royalty space, they're on the other end of the spectrum. And so what we give is really good downside protection at the same time as having significantly grown the company. And every fundraise we have done has been at a higher price since we started this company. If you look at the next slide, the capital structure. So the first thing you'll notice is I said we have about 5.3 million US gross revenue for 2020, and our market cap is about 51 million currently. So we're trading at less than 10 times gross revenue, which for a royalty company with mainly producing royalties is cheaper than any of the other royalty companies listed. And I think that's probably partly a function of we've only been here for 2 months. And so I suspect in a COVID world, a lot of people don't even know that we exist yet. But if you look at our track record, if you look at the assets we own, really high quality assets at a compelling valuation. We have, as well as that, we have about 10 million US cash in the bank, and we can access debt on an ongoing basis as we did for our last acquisition. And in terms of the ownership structure, about a quarter of the company, just under, is owned by management and directors. We have over 30% institutional shareholders, which is, I think, a testament to the quality of some of the. And again, that's very unusual for a company our size and a royalty company our size to have that institutional ownership. And then a significant number of the private shareholders who have been with us for a number of years before we listed. And Keith mentioned it in his introduction, but I think when you look at a capital structure, really important to look at warrants, options outstanding. And I think in our case, you'll see that there are no third-party warrants in the company. We've never given any. So the only PSUs or options that exist are to management. And so we are incentivized to grow this company the right way and to build value for shareholders as we go. Board and management team. So you might be looking at me and saying, he looks like a young, dynamic CEO, but we've got some really good, wise, experienced, successful heads around us. And I think with the listing, we joined the Discovery Group. So really be pleased to be part of that. And John Robbins is on the board and Jim Patterson is on our advisory panel. And I think they've had some really good successes over just in recent times with Great Bear, Kodiak Copper, Farweed Zinc recently. And so very pleased to be part of that group. And the two other directors on the board, Peter Williams, who from Australia used to be part of Western Mining before BHP took it over, was one of the founding members of Independence Group, multi-billion-dollar, very successful Australian miner now. A number of other companies in West Africa he's built up. And then Martin Chiren, who has finance background and is our fourth director and rounds it off. And the management team, if you have a quick look at it, the core team in London is myself, David and Greg, so an average age of about 35. Richard is based in Melbourne in Australia and is the lead on the technical side, and like Peter, came out of Western Mining. And so a lot of experience, a lot of contacts behind him. And that's really important because we can work 24/7, night and day, to come uncover as many opportunities as possible. And then we can go to our contact base, some of our institutional shareholders, our board, our management team, and our network, and really make sure that the opportunities we're coming across are really good ones. So this is a quick timeline for you from when we listed in early 2017 up to, when we started the company in early 2017 to when we listed in July 2020. And you can see consistently we have made a number of acquisitions over operating assets. And typically for a royalty company, the hardest thing to do is to buy a royalty on a producing mine. You can go out and maybe pick up an exploration royalty relatively easily, but to get good quality royalties over with blue chip operators is I think really unusual. And that is what we have managed to do in a very accretive way since we started. And this is again, full transparency since we started the company privately. Every fundraise we have done up until the listing. And you can see that every time we have done a fundraise, we have done it at a higher price. We have delivered value back to the shareholders, and we have minimized dilution along the way, which is why management are still really material shareholders in the company today. So that is a broad overview of the portfolio. You can see already very diversified by jurisdiction, much more so than we'd be able to do as an operator. And that is one of the benefits of a royalty company. And on the next slide here, really important point as well. Exploration optionality. 2 of our royalties cover genuinely district scale land packages, and these are both operating mines. And on Taranga's Wang Yon, there is over 1,000 square kilometers of ground that we have a royalty over. And any future resources they mine there, that they discover there, we will have a royalty over. The same at Premier Gold's Mercedes in Mexico. It's just over 600 sort of square kilometer license package. And that gives us really good exploration optionality going forwards, and so important for a royalty company to benefit from for years to come. And the growth pipeline I'll touch on quickly, but one of the benefits of being listed now is that we have more money in the bank than we have ever had before in our history. We have more revenue than we have ever had in our history. We have a better shareholder base, network of contacts, being part of the discovery group than we have ever had. And so that enables us to look at some of these royalty opportunities we couldn't do when we were private. And we have 3 years of having traveled the world, looking at royalty opportunities that we can now take advantage of as a listed royalty company. And one of the strategies, as all the royalties we've bought to date have been from third parties. And I think one of the really interesting strategies, and Keith touched on it as well, with royalty vendors selling their royalties into royalty companies for part cash and part equity. And this is a quick example of some of the big mining companies that have done it recently, just in the last couple of years. And you can see that consistently every single one has, since they did the deal, the share price of the company has had a material increase. And I think that Elemental, as it stands today, is a really fantastic vehicle for some of these third-party royalty owners, whether they're private or corporates, to maximize value through. And to take 2 specific examples, the 2 of our peers who listed 2 or 3 years ago, this is a comparison of where Elemental was at the listing and where they were. And you can see that both of them, even with a less risky diversified royalty model, have seen really material gains to shareholders, 500, 600% plus since they listed. And if you look at Elemental, when we listed 2 months ago, we had more producing royalties than either of them. We had more revenue than either of them had, and we had a lower market cap. So I think it's put us in a really, really good position going forwards. And so to sum up here, what you get with Elemental is you get a really focused, driven management team, very well connected and supported through Discovery Group in Canada. We have a track record for the last 3 years of building this company from the ground up, of adding value every single time we've done it, of increasing our revenue nearly 100%, with growth in the portfolio from the Mercedes royalty that comes in from 2022. And you get all of that at about a 10 times gross revenue, which is significantly less than any royalty company out there today of our peers. So I think hopefully that has given you an introduction to the company. And if you'd like to get in contact with us, please feel free.